the value of the yen rose sharply. Again, in the New York foreign exchange market, it seems likely that Japanese foreign exchange authorities intervened in the market in response to the weakening yen. As the yen has recently weakened significantly, foreign exchange market participants were anticipating intervention by the Japanese foreign exchange authorities. The yen to dollar exchange rate of 160.245 yen recorded on this day is the highest since 160.15 yen in April 1990s. However, the dollar-yen exchange rate recorded 152.970 yen, down 0.40% compared to the closing time of the New York financial market. There was also foreign news reported on April 29 local time that the Japanese foreign exchange authorities had intervened as the yen-dollar exchange rate soared to 160 yen according to sources. As the yen-dollar exchange rate rose to 160 yen and the yen weakened further, Japanese authorities began buying yen and selling dollars. Accordingly, the exchange rate on this day returned to the 155 yen range. Previously, Japanese authorities did not confirm intervention in the foreign exchange market, but hinted at the possibility. It is difficult to ignore the negative impact that such violent and abnormal movements will have on the national economy, said Masato Kenda, head of the Japanese Ministry of Foreign Monetary Affairs Department, and explained that the country will continue to respond to violent foreign exchange market movements. The yen-dollar exchange rate recorded at 156 yen per dollar in the New York foreign exchange market in the early morning of May 2nd local time. It gradually took a downward curve and fell to the 153 yen range, 153.12 yen by evening. The exchange rate drop of about 3 yen per day is a fairly large fluctuation. In addition to this, as the observation that the Japanese authorities are repeatedly intervening in the market has become stronger, the value of the yen has risen due to caution. As worriness about the Japanese government's intervention in the market has grown, the yen has risen for the time being, but it is still unclear whether there will be a break in the weak yen. The yen-dollar exchange rate plummeted from the 157 yen per dollar range to 153 yen in about 40 minutes about the announcement of the results of the Federal Open Market Committee FOMC meeting of the U.S. Federal Reserve in the New York market on May 1st. The market predicted that Japanese authorities would have intervened in the market. There appears to be the possibility that the Japanese government and the Bank of Japan will intervene to buy yen and sell dollars worth 3 trillion yen, about 26.6 trillion won. The yen dollar exchange rate is soaring. On April 29th, the Asian foreign exchange market surpassed the 160 yen per dollar level for the first time in 34 years. Then it plummeted to over 4 yen in a few hours. At the time, the possibility of the Japanese authorities intervening in the market was raised. The estimated scale of Japanese foreign exchange authorities market intervention is 5.5 trillion yen, or approximately 48.4 trillion won in Korean won. Previously, at the time of the first exchange rate intervention on April 29th, the scale of intervention was estimated to be 3 trillion yen, about 26.6 trillion won. In the end, 77 trillion won was intervened. In the second round, regarding the foreign exchange authorities' intervention, the Japanese government consistently said no comment. Normally, when the yen is excessively weak, the Japanese foreign exchange authorities corrected by selling dollars and buying yen, and when the yen is strong, they corrected by buying dollars and selling yen. The decision to intervene legally rests with the Secretary of the Treasury, but in practice it is often made by the Treasury's Treasurer for International Affairs. When the Treasury decides to intervene, the BOJ acts on its behalf, selling dollars to private banks and buying Japanese currency from the Treasury's foreign exchange fund special account. The BOJ can trade in foreign markets or intervene outside of trading hours in Japan or on public holidays through foreign intermediaries such as the Federal Reserve Bank of New York or the European Central Bank. These requests for support are rarely denied. A total of 9.2 trillion yen was spent through 3 interventions in September and October 2022. The September intervention was carried out after former BOJ Governor Haruhiko Kuroda held a press conference on the monetary policy meeting. The October intervention took place early in the morning or late at night. Japanese foreign exchange authorities are said to have unilaterally intervened in 2022 using only the country's foreign currency reserves. Previously, a total of 9.2 trillion yen was spent through 3 interventions in September and October 2022. The September intervention was carried out after former BOJ Governor Haruhiko Kuroda held a press conference on the monetary policy meeting. The October intervention took place early in the morning or late at night. Japan's foreign exchange authorities unilaterally intervened in 2022 using only the country's foreign currency reserves. At the time, Finance Minister Masato Kenda did not immediately announce an intervention in October 2022 and declined to comment. Such stealth intervention can suppress speculative and spend the effect of intervention. by making it difficult for market participants to determine the reason for exchange rate fluctuation. The intervention is not made public but can be confirmed through the foreign exchange balance manipulation implementation status published at the end of the month.